Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Richard Robinson, manager of the Ashburton Global Energy Fund. Hello, Richard.
Hello. Hi.
So I thought we'd start by looking at your performance, which has been very good in 2016. We had 64% upside. And I was just wondering how much of that was due to the fact that the oil price doubled and how much of that was due to stock selection?
Well, actually, yes. I mean, it was a good year in 2016. I mean, it followed on from a nice year in 2015 when we were quite bearish on the oil price. So with our model, we actually desensitize from the oil price if we get bearish. So we are actually number one in 15, number one ranked. And then in 16, and actually late 15th of December, we really upped the oil price sensitivity of the fund. And that's why we had quite a strong 16. So it's a little bit of a combination of the oil price and how we position the fund. We moved it more to a high oil price sensitivity.
I suppose the next question must be then, what is your opinion on the oil price now?
Yeah, with a 6 to 12 month view, we're actually pretty positive. We think that oil, the inventories, everything's now based on inventory levels. Inventory levels are very high at the moment. OPEC are beginning to actually focus, a little like the Fed focuses on inflation to set their policy. OPEC have almost changed policy and are looking and focusing on correcting those inventories. So with the cuts at the moment, we think the inventories rebalance and we actually become much more normalized by the end of the year. So we think we move back to a normal price, which is, for us, marginal cost plus maybe 10%. So maybe by the end of the year, we move back to a sort of marginal cost level of about $65 a barrel, maybe 60 to 65. So quite positive for oil and oil stocks.
That's not a 100% uplift, though, like we had last year. So I presume then the upside for the fund is more muted, although positive.
Yeah, well, last year was all about the price lift. Moving from 26 to 40, 45 even, we finished at 50, but that sort of 26 to 40, 45 move, it was great for E&Ps, great for their cash flows, but not good for activity. No one was really cranking up activity. No one was really making strong profits. Now this year is more about activity than price move. So with oil prices settling above, I mean, I know they've dipped short term below 50, but settling above probably in the second half and probably second quarter, we think this is an opportunity. Second quarter, third quarter, fourth quarter, moving back above that 50 level, it really engenders, I think they said animal spirits might come back, and particularly in the US, we think there's a big market share grab going on with US oil versus international. So US, and particularly the Permian Basin in Texas, there's a real small area in Texas that's activity is very strong at the moment. So it really is about activity pickups for this year, and that is very good for service companies.
And looking at the underlying holdings of your portfolio, you do have nearly 80% of the fund in US listed companies. Is that to do with that's where the raw commodity is, or is that to do with the fact that that is where the best run companies are?
Well, it's where some of the cheapest resources are. It's where a lot of activity is going on. It's where they call it short cycle oil. So this is oil that can come on in 6 months, 6 to 7 months. So that's where companies are, and also they can hedge out. They can hedge forward 6 months and actually have a much lower risk production profile if they've already forward sold their oil and they know what their profitability, roughly what their profitability is. So it secures and we see a much better growth coming from that area versus international. So it's really a dint of our top-down view on the oil price direction combined with our bottom-up sort of research on the acreages, who's making money, which service companies are going to be involved in bringing that oil out. So yeah, it's a fundamental and a top-down sort of approach, and combined with the bottom-up knowledge of the area.
Richard, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.